Everybody, sometimes you're the bug, sometimes you're the windshield. And here's what we got from Tesla. See if that'll post in the chat. No, maybe not. There it goes. Now, Q1 production 362,615 vehicles. Deliveries was 336,681. Energy storage deployment 10.4 gigawatt hours. And the company update will be live streamed on X April 22nd at 4:30 Central. Wah, wah. I guess didn't get the pop despite regionally really good numbers. Couldn't overwhelm the rest of the world. I think it was probably low mainly because they kind of switched over models on the Y. The Y is the best selling car in the world, and they switch over the Y. So we're down 12 right now, 11, 11 and a half. But we're not even below yesterday, or day before yesterday. Not below Monday. Still good. As long as we hold here, still set for that rally right there. Apparently gotta mute my phone. And despite having my headphones connected, I guess it's not working. Whatever. And nope, that's what we got on Tesla. Sit and wait. I bought starting. I guess I bought here and bought more here. So now we see what happens. Now this can this can move. So it does not have to stay pulled back after the market opens. Just remember, it doesn't have to be a red day. But when you look at this guy, our good pal Bitcoin here. That's red right now. We maintain that red for 10 more minutes. We hit the open. Might get a down day, a red day in the market. Just throwing that out there. SPX may close red if Bitcoin's red when we open. Fascinating, right? Fascinating. It's been quite accurate. Yesterday, Bitcoin was green. I mentioned that we might see a green day in the market. Guess what? Got a green day. Now, this is kind of interesting because you look at, we're just barely below the close from yesterday on the futures. Spot market, of course. Look at that hammer candle. Whew. Big fat dip, bringing it back quickly. Need to get through that level right there. Gotta get through. It's the long and the short of it right there. Today, Tariff Day. What do you expect? Expect a sell the news event worse than we expected? Or maybe, I mean, Trump has this interesting habit of pushing the worst case as he talks about it. And then when it actually happens, it's not that bad. Not that bad. I mean, this, like, think about it. We had 4 years of it, 2016 to 2020. And then here we are, round two. He says a bunch of stuff. Like, he says all sorts of stuff. Gets people just... go watch any interview about hanging out with Trump. Like, from news media people, whatever. They talk about the fact he just says things to stir people up and see what happens. Like, that's what he loves to do. Like, that's his personality. And he'll just say things. So, don't get too caught up in the tariffs until we see what actually happens. So, that probably indicating that the S&P is not going rocking higher today, right now. Now, it's not a guarantee. There's still like around a 5 to 10% chance that They aren't correlated today, and it means nothing. But looking at the S&P futures, that's cool. I love it when we came up, tested the 30 minutes, and so far getting a pullback. So far. So just looking at the micro, this low right here, this high right here. That's interesting. Kind of double high. Look, I mean, we did we're down to a 50% retrace at this point. And that's interesting how it bounced right there before we made that high. Those two highs, let's see, the high 94.75, 95.75, so that's a point higher right there. This will be a key level to hold right here. You want to set an alert. Need to hold that level. If we don't, we're probably coming right down here. Right like that. Pretty simple. Pretty darn simple right there. You can set the alerts right there. All right, before we get too far along, I guess, should always do this. All trading involves a substantial risk of loss. Past performance, not necessarily indicative of future results. This presentation tended to be informational, educational, fun, entertaining. Hopefully you're entertained. It's not a recommendation to be buying or selling any financial instruments. If you desire personal financial advice, hire and consult a financial advisor. Like I said, Tariff Day and Tesla earnings, or not Tesla earnings, but Tesla production numbers are already out. Delivery numbers are already out. They went ahead and put them out at 9 a.m. instead of waiting for 5:30 like they do historically. Probably the big event of the day. What are the tariffs going to be? Right there. We'll see. We'll see. So this won't happen before the market closes. That leaves the market open to drift and chew on it all day. So right there, President Trump due to hold a press conference about tariff policies aimed at reshaping U.S. trade relationships. He's doing it from the White House in Washington, D.C. So we'll see what happens. See what happens. Thinking about maybe doing not like a live stream for YouTube members, but maybe a thing with Termite Trading Lab members. I don't know. I'm kicking it around. It depends on how my day goes. So thinking about it. We'll see what happens. I might could invite both. I don't know. I haven't figured out quite how to do that yet, but maybe. So we're left with this on Friday. Right there. Let's actually mark these out. Canada doesn't really matter. For the U.S. markets, we've got that one, that one, that one, and then Jerome Powell speaking right there at 11:30. Should be an interesting, and look at that. What are they? They've got something they want to get out there. Look at this. They want to talk about something. When you see this, when they start piling up all together, they've got something they want to get out there. I don't know what narrative they're going to start pushing. But when all these guys start talking, and they got these guys talking, when all these Fed members start talking quite often, they're usually trying to push some narrative into the market. Some sort of policy change. Let's see what next week. Get the minutes next week. CPI next week. PPI next week. What the heck? That's weird. Why'd they push them out to Thursday, Friday? Usually they're out on Wednesday, Thursday, and then we'll get retail sales on Friday. So we're doing retail sales again, bumped out on Wednesday the next week. Wow. Well, they really got it all weird. So retail sales here, CPI here, PPI here, retail sales. It's kind of odd the way they've shifted this all around. The next FOMC meeting, not till May. Those minutes, I mean, we already know what they did, right? So we'll just see what they were thinking when they did that. So we're going to get into earnings starting this week, the second, not next week, but this week will be, earnings will ramp up, earnings, Tesla already saying the 22nd, right there is the day they're going to talk about everything live streamed on X. I don't know. News-wise, doesn't feel like anything's like compelling, like even for the next month. So that leaves the market up to earnings, I guess. It leaves it kind of free to react to earnings pretty strongly. That'll be probably the big catalyst and driver for the next few weeks. Once those start ramping up, and you're like, well, how do I find earnings? One way you can do it is right here. There's an earnings button, and you can look at the earnings. Like who's set to report earnings. We've got 55. Even this week, we've got quite a few. 150, 150, 32. Coming up next week, 55, 116, 162, 250, 323. Starts ramping up as we get into that second week. And you got 224, 239, 425, 467. And it gets real spicy. Look at this. We have 496, 1900, 3000, 1800. That's where it gets really spicy right there. There's earnings almost every day that the market's open. So, should be interesting. See, RH should be after the close today, I think, if I remember right. Restoration Hardware. Now, does it do the drop, or are we at this support level where it's been support since last summer? And we're talking about 10 months. We're right at that. I mean, look, we've hit this level once, twice, 3 times, 4 times. I mean, if you're feeling sparky on earnings, you could sell a put like right down here. If you're thinking it won't just get crushed, or you can sell one down here, just out to the end of the week. May not be much premium there, but it is opportunity. April 4th. See what we got. All the way down 130. Oh, 145. Look at that. Nothing. No premium, no premium, no premium. You'd have to be what I said the bottom of the box was. Bottom of the box at 185, 190. Let's see, we're at 190. I was like, that's May 2nd. Jump back to April 4th. 190. I was looking at the IV instead of the $2. That's not bad right there. That's not a bad deal. Sell that. If it doesn't crush down below 190, close it out tomorrow. Not a bad shake right there. Now the risk, you might have to endure a dip down here before it recovers. You might have to take those shares and ride it out, sell some upside calls at 190. Interesting, right? I think it's interesting. If you don't, if you like that, I mean, it's kind of, this is a strategy I saw over the weekend with my friend Rob Booker. He was talking about doing stuff like this. Of course, I'm not using the tool and stuff that he was hawking, but just coming at it from a strictly technical analysis proposition. I mean, look, they make a ton of money. Ton of money there. And go dive into their financials. They've been growing, except for the occasional pullback. So if selling premiums your kind of bag, baby, you might consider this. Your net income is positive. Been growing. Got a lot of debt though. Holy moly. CLOZ. Ooh. I haven't fired off Goose. It's those triple B rated, closed in. Fixed income. Check on the bonds. Ooh, man, what a nasty dip this morning on the bonds. Dividend dip. Yeah. You need to park some money. This is a smart place to put it. These are AAA rated bonds right here. If you want to park some money somewhere, make 6.09%. Not a bad place to store some money. Relatively lower risk. I mean, think about it. This AAA rated debt, essentially. The reason it dips down all the time is the dividend payment. Take the dividend payment out. There's what kind of chart you got. We're in a little dip. Before we make another pop. See what happens every time we dip before. A little bit of chop here. Back in 22. Didn't even get hit that hard. Dividends kept paying. So this, if you need to park some money, here you go. This is the bond recovery right there. That's what this rip is. And if you want a little higher return, but a little more risk, you get the triple B rated, B and triple B rated. You can see on the adjusted scale, gets a few more dips, a little bigger. That financial insecurity, uncertainty. This is actually at a low point, and if it if it rips right there, it might be interesting. Dun, dun, dun. Yeah. So as Goose says in the chat there, no AAA rated collateralized loan. These are collateralized. No AAA rated collateralized loan has ever failed in the history of AAA rated collateral loans. Just think about that. So when I say safe place to put money, that's as long as you got time to wait, you'll come out ahead right there. I don't talk about stuff like this very often, but it's a good place to park money. All right. I'm bummed out on the Tesla thing. I was really hopeful that was going to ramp. Oh, look, we're turning green already. Watch out. As long as we stay above that low, just going to go shooting off here. Ain't over yet. And too late, though. Market's already open. Bitcoin green now. Doesn't matter. It was red at the open. That's all that matters. Probably gonna have a red day. Only matters at the open. Like, don't extrapolate anything else. Like, Bitcoin, red or green at the open. Usually, it's like 95% of the time correlated to how the S&P closes for the day. Kind of weird. And S&P can close down $1 and be red for the day. It can be, it can be down 10 cents and be red for the day. So far we got to move up and a retrace. As long as we hold the 618, move up, break through the daily roadmap line, break through that prior high, break through that resistance. We could be heading up. I got a strong feeling that, I think we're oversold on this tariff news. This looks overdone on just a rumor. We don't have any concrete facts. I think everybody got epically bearish. Look at the euro. That still looks like it's coming down. Jumping around, look at the dollar. Still sitting on the consolidation zone. This, if we break back below that, this is probably taking another trip down here. If we break above that, we're probably taking a trip up here. I give a little bit higher probability to that before this happening. Going up to the roadmap line around 105 before we go down to probably 101 area. And you look at the Euro USD. Yes, this is Forex. This looks likely. Like we did the initial drop. We did and this pullback to the roadmap line looks likely right there. If you don't have the roadmap line, you don't know how it works. There's a link in the description. $5 gets it to you. But if you're like, hey, I want to know more without having to give you money, that's cool. Click on my channel name right under me over here. If you're watching on the computer, if you're on a phone, you gotta like do the scrolly thingy, flip it back to vertical, my channel name under there, and click it. Go to the channel homepage on YouTube. Watch the video that plays automatically on that page, or it's pinned to the page. It explains this orange line right here, how it works, how to code it yourself. And if you're not the type person that wants to DIY and code it yourself, $5 is the price. You can get the easy button and put it on your chart. And literally $5. It's not like there's no crazy upsell. If you want access to the weekly watch list for 12 more months, it's like $19 more. So it's like $24. You get like 15 months of weekly watch list of stuff bouncing off. And just an example, here was this week's watch list right here. Stuff that's set to bounce potentially. Look, see? That's what I'm talking about. Like potential for this to bounce, break above, get on going. Like DocU. Another one set to bounce. eBay did a bounce, set to go to the target at 73. So this is what you get this weekly watch list every week like that with all these set with a bounce already in place. I do all the hard work for you. That's what you get for that $5. You get it for 3 months at $5. If you want to add like another year, it's like 15 more bucks, something like that. I don't know. I don't set up the order prompt, And the team was like, you're selling this really cheap. We might want to raise the price. I was like, people like it for $5 though. It's a huge value for a low dollar amount. Anyway, back to how do we make money today, right? How do we make money today? What are we watching? Let's jump back down. Still got that support line right there. As long as we're above that, potential to go up. And if we break down, that's still the operative for today. NASDAQ, same Z's. That low, that high. Here's the line. 19,250. Right there. We start getting below that. Probably going lower low. Right down here. We bounce. That downtrend of highs. Probably going to be clicked on the wrong thing. It's just a little baby downtrend of highs right there. We'll go retest that, break above. This was the lowest low right here, so let's see what happens. It's like, is this one more little extension, or are we building a reversal? That's the big question mark right here. All right, is this going for an extension lower, or are we going to hold this and build a reversal? All right, this is choice number 1. This is choice number 2. And actually, since we're in a downtrend, probably this is choice number 1, and this would be choice number 2 that we're done with the correction. Why did I say we're in a correction? I mean, look, it doesn't take a rocket surgery expert to understand. We made the high in December. Everything from December till now is lower. That's a downtrend. All right, simple as that. Oops. Clicked on a tab instead of my button. Now, when you zoom out even further, this was a major high in July. Even though we went higher over here, we're still messing around, doing the mess around. Lower than July. That's a key level. We break above that, probably going up again. Turn things positive. The low from August, when everything looked really bad, right over here. Is it possible to go retest that? Well, it's always possible. I think we're probably done. We're at that 618 level, right there, holding pretty well. This rally off that August low to the December high. We're at that 618 level, holding. Those 618 levels, they're support and resistance, all right? So when I'm looking at that 618 on the little baby chart, it's just the same on this big time frame, 9-month long pattern right here. It's an important level. It doesn't always hold. It doesn't always provide the support or resistance you think it will. That's why I use it as a trigger on that daily roadmap line. That's why I use it on the trigger on the market roadmap system. That's why I use it as a trigger on Apollo. That's why I use it on trigger on Echo Trades. That's why I use it as a trigger on Triple Threat. I use it on trigger all over the place. Like this 618 level is important. Anytime I draw with these 618 levels, they're important. It doesn't mean they'll hold, but they're important. Russell, on the other hand, looking nasty. This looks like we might just blast this on lower. Yeah. Bummer. Oil, still grinding this roadmap line. Say what you want. It's important. These roadmap lines are important. You know, some of you are like, what kind of magic voodoo is it? It's just a combination of Fibonacci-based EMAs. That's all it is. It's not even difficult. It's just when you dig into the weeds of Elliott Wave and Fibonacci, this combination right here that I learned from Jody Samuels, super powerful. Super powerful right there. She uses it a little differently. I use it as a big support resistance on all time frames. Sometimes we bounce off. Sometimes we slice through, retest, and get continuation. That's what I'm expecting right now. Once we grind here, maybe pull back just a little bit, bust through, rally up, retest, and probably shoot up here. That's kind of what I'm expecting to happen on oil. Gold, grinding those highs, baby. 3,200, 3,300. I remember this fib ladder right here. You know, when you get a pullback, and we didn't hit the roadmap line on this time frame, but when we do that, it's like this one's 75% likely, this one's 70% likely, this one drops down to 35% likely. You see, we consolidated right there a lot. Now we're pushing on through. This one drops down to like 20%. This one drops down even more, like 10%. This one's like getting down around 5%. This one less than 5%. We're talking like 3%, maybe 2%. And then this would represent less than 1% of moves. We'll just shoot all the way up here without coming back to the roadmap line right there. And this works on all time frames. So this is less than 1% of moves on gold would just go ripping. And it can bounce, it can ping pong between these levels like this. You've probably seen charts that do stuff like that. And they'll ping pong on the lower time frames. They'll come back and hit the roadmap line. And this one's gonna be a 4 hour. And did a 4 hour bounce here, 4 hour bounce here, 4 hour bounce here. And this move right here, we're kind of getting it played out a little bit. So watch out for a retrace. We can come back to that 4 hour roadmap line pretty easily. After hitting this, you can see how that ping pongs between the fib levels. Oh, there's the roadmap line. Might go just a little bit lower before we pop on up there. But when we do that, it doesn't even get close to the daily. Nah. Doesn't even get close to the daily. Anyway, that's gold. Can it keep rallying? Sure. We could go to 5,000 even. Probably not going to do that without a pullback. And the pullback, the higher we go, the more severe the pullback's going to be. Bitcoin, I would love to see break on out of here. It's interesting the difference between the futures, kind of back testing from the top, back testing the roadmap from the top on the futures, whereas the spot market, we have some differences here. We're testing it from the bottom. So if we can bust through, this was a 618 retrace right there, held, rallied pretty strongly. We bust through. That's the target right there, 103.5 for now. May see a retrace back to like 94. And then the extension. It doesn't have to stop here. It could go up to 114 if things get really spicy. And if this actually breaks out, it may be leading the stock market by about 2 weeks. If this, now the other interesting spicy thing here, if this is the third green day in a row on Bitcoin and we managed to get a third green day on Ethereum, which we don't have yet, Ethereum not participating, we get 3 greens on both of these at the end of the day. Come back in tomorrow morning, we got 3 greens here, likely to kick off a 2-week-long rally for both Ethereum and Bitcoin. This kind of crypto wide right there. It's just interesting little chart pattern. I don't know anybody else that's paid attention to that. That's kind of a me pattern right there. I think if you hear anybody else talk about it, they probably heard it from me or heard it from somebody that heard it from me. I've never heard anybody else talk about that one. So I've also never heard anybody else talk about the Bitcoin green at the open. And it only works during bullish periods of Bitcoin. When we enter crypto winter, that'll break down and it won't work anymore. So like once we got past November, this was a big tell right here. When we had that right there, it quit working. Like it quit Bitcoin being green on the day or red on the day, quit being correlated to the S&P 500 right here. Like it just quit. Like, we got like 5 days in a row where it didn't work. And I was like, that's weird. And then it didn't work till we made the bottom. It actually didn't start working again until we started getting about in here. We had to come all the way through the bottom in 22. And then it started kind of working here. And then it started really working right in here. And it's just kind of been just one of those things I watch in the background. I don't tell a lot of people about it, but it's just one of those things. It's interesting. It's like, it's not perfect every day. It, like everything else in the market, not perfect every day. Checking on GME. Can we get the spicy rally back up in here? I don't know. All right, I go pull things moving up $2 more, put them on the gainers list. Down $2 more, put them on the decliners list. And we have pharmaceuticals top of the list today, once again. That is a red flag on the play. Caution, when pharmaceuticals make the top of the list, it's probably going to be a crap day. Just not much. It makes it tough. There's another, both pharmaceuticals top of the list. I don't trade pharma. I don't trade biotech. I don't trade medical stuff because it doesn't always follow the pattern. It's just, I can do the patterns. Sometimes it works, but it doesn't always, it's not reliable. I like reliable, high probability patterns. And when something proves to me it's not going to do it in a reliable, high probability way, I just tend to avoid it. So ONC might rally up to 329, but remember all the things I just said. We're stuck at this prior high. It may not break through. It may go on a retrace right here. And this thing, as you can see in the history, it's known for some quite violent retraces. LNW, Light and Wonder, Consumer Gaming. This looks like we're going down. Not too good right here. That high, this low, this high. Probably going to get a little bit lower right down in here. Despite this little pop, we may bounce off the daily roadmap line right there, which is pretty flat, and get one more extension down in this $80 area on LNW, Light and Wonder. Oil, natural gas, probably working on. While we have a little bit of positive greenness, I would bet we're coming down here. Now, there's the resistance right up there at 443. And here's the support down here at 340. It's kind of a coin flip. I mean, it doesn't have to correct, but seasonality-wise, I would expect this right here. In fact, I'll be kind of shock and awed a little bit if we don't flush this on down before we break out again. It could just, it's entirely possible we just sit here and churn for a while. Natural gas doesn't typically do that. You go back and look, we tend to trend up and down. We don't tend to just sit in a tight little range for a long time. And there's one. Right around this time of year, too. Look at that, April, May. Ha, that one. I said we don't typically, and then I find one right there. Look. Look at that tight little range right there. Started in April and ran into May. So it doesn't have to move at all. Just keep that in mind. Oil is a leveraged natural gas. That's what ultra means. Careful on leverage. Reverse split. It's dangerous. Dangerous stuff right here. Another reverse split. Dangerous stuff. Even though we're on a rally, be careful. This has dumpster fire kind of thing. It's like playing, if you've never seen this one, UVX1. Same. Now, why is it that these decline and have reverse splits with the leverage stuff? Like VIX chart doesn't move. UVXY is VIX. This doesn't, like, it always comes back to a resting zone down here. Down in here. It always comes back. Always, 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 always. You see, it never trends. It's always flat. Natural gas. It never really trends. It goes on little excursions, if you will, but it never trends. It goes on excursions higher and lower, but you look at the long-term history, we're basically at the long-term history for the last, I don't know, almost 40 years on natural gas. just doesn't go anywhere. Makes it extremely difficult to make money if you're a trend pullback continuation type trader. And hey, Kimberly, my favorite subscriber. So when you look at something like Boyle, because natural gas never trends, and these are that's the little excursion, but it never trends. So the cost to maintain this position with the leverage eats away the value over time. Same on UNG. Right there. Same on UVXY. Same on all the VIX flavors. It just costs way too much. UVIX coming up next. UVIX. Same dumpster fire type thing. Reverse splits. It just costs a lot to maintain the leverage on natural gas and volatility. And you know, one of the things you can look at is this chart right here, the futures for VIX. The forward curve is down. That means it's going to eat away at the leverage product. All right, natural gas. When we look at the futures chart, it is down. That means it's going to eat away at the leverage product. CL. Now this is an interesting one. It is also currently down. That means the leverage products like UCO, it's going to eat away at them. And you can see back here, we've got some adjustments that have happened in the past. So a little due diligence on your patterns and how you're playing can go a long way to make a success. And TSDD, that short didn't go anywhere. Might be looking for number 5 right there. Be careful. Let's check on TSLO. Yeah, we're bringing it back. Bringing it back. Not quite up to the close yesterday. Tesla. Yeah, I got no damage done. And my average cost was $9.70. So I'm right at break even. Added 3,000 shares. I think my average cost was $9.70. Yeah, I think got no emergency to get out. In fact, the potential for that is quite high. All right, moving on. TECS. 3X Bear Technology. Watch out for this one to roll over. If we break back down, crush through the roadmap line, this is probably going back to the bottom. This is a reverse split. This is a dumpster fire type chart. Be careful on those. ETHD, ultra short Ethereum. If Ether turns here, I gotta turn off the adjustment. If Ether turns here, this is probably gonna break below the roadmap line and crush down. ETHU looks pretty nasty. It's got a reverse split scheduled right there. Be careful maintaining that leverage on Ethereum. And this is a nasty reverse split. If you got 1,000 shares, you're gonna have 50. TSLQ, another short, turning red, not breaking above that high. Looking like we might get the extension lower. Chance if you're taking the short. DEO, Diago. I don't know. Got further downside support at 100. Looks like we might do it. TKO has the potential to bounce up through the roadmap line at 161 and get to 185. VXX. All the things I said about UVIX and UVXY apply here also. Watch for this to drop. Now, because of this fact, this one tends. Now, it's kind of been messed up since the big drop in August. Kind of goofed it up a little bit. This one tends to trend higher over time. We've just been kind of sitting here grinding. It's kind of funny. It's almost like this one knew that Trump was getting elected. Volatility was coming. Winter is coming. Anyway, this looks like we could pop back up here, which is at the top of this consolidation range. This hadn't really been trending much, even though this is short VIX, and typically over the long haul, this one trends higher. VIXY, another dumpster fire, reverse split. Be careful. Newsmax, well, biggest loser. I mentioned that this may come all the way back down to the bottom. Be careful out there. I wouldn't trade it with 3 candles. That's just not my bag, baby. I don't trade IPOs. I just don't. I wait till they have some history, and then the typical IPO starts out in a bearish pattern, and you can't really prove it because we don't see the chart before it went public. It's kind of a private equity chart thing, and there's not like a daily update and all the things. But typically, it's pretty bullish running into the IPO. And then people are cashing out. People invest, early investors are cashing out at the IPO. So that presents the opportunity, if you will, for something like that to pull back, do a corrective move after the IPO. I think there's a lot of hype coming into an IPO, and that's why you get a pullback. FNGA, which is formerly known as FNGU, working on the reversal here, turning green. Netflix turning green. Was red, turning green. I know somebody, one of my term trading them followers, really going to be excited about this if it breaks out and cruises on higher in the next couple days. Looking pretty strong. Don't remember why I put that trend line on there. Oh, it was a copy of that right there. Copy of this bounce, copied right off there. Yeah. Yeah, that right there. Copied off of this bounce. Has the potential to go up here. All right. App loving. Still churning here. If we can break above the 618, upside 588. If we don't and we reject the 618, downside is 159. Don't have anything more clear at the moment. Wow, everything that was red turning. Look at that. Market turning around a little bit. Encino, big drop. Looking for the reversal here. That was a lower low. That could be done. This could be a buying opportunity here on Encino. Not saying it is. Back to IPO. Look, this perfect example right here. IPO, and then we just made the lowest low right there. It's taken, since 2020, it's taken 5 years for this to play out right here. 5 years, and this may be an opportunity at this point for going higher. Another example, this one right here. Snow, IPO, super high valuation. Lowest low right there, late last year. Now, potentially working on something bullish. But it doesn't have to. Another prime example. This one. Started out, and everybody thought we were bullish. Right? Started out ripping. Beautiful. Started out ripping, and now it can't find a bottom. Corrective. It was all corrective. Like, right here. You can put whatever fundamental story you want to it. Typically, IPOs, and this little dinosaur here means IPO. It means the beginning of time. It's like a beginning of time, dinosaur time, right? Typically, a stock, 95% of the time, stock will make a lower low. Now, some stuff like Reddit, we made a fast little low. This was lower low. And then we went on a tear. But it might come back and make it even lower low. Be careful. The hype is real. You can lose a bunch of money waiting for the lower low. But if it's a solid company and it makes the lower low over here, that's a good time to buy. That's like I did on snow. I bought at that lower low. So all these things are on the list today. MSTR, I'm going to hop around a little bit. And back tested the downtrend of highs. If we break back, yeah, this is an important level here. If we break above that 340, probably set to go higher. Probably set to go higher. Meta. This might be a buy the dip opportunity right here. I'm just saying, like, if you're a long term, like to hold stuff like this, these guys, that might be a buying opportunity right there. 586 is pullback from 737. We could be in the thousand. We could double this pretty quickly. Pretty quickly. And compared to like Apple, I have a law of big numbers thing. If you may have heard me talk about that, like Apple, to double Apple, it takes $3.3 trillion. But Meta is way down here. It only takes $1.4 trillion. And that we could lose 1.4 trillion off of Nvidia and it flow right down there to Meta. That's the crazy thing. See, Nvidia, if it just dropped down to the target right here, that's $1 trillion off of its market cap. And that could flow right into Meta, and Meta be a double, and this be lost 40 bucks. And bends a lot of people's minds. $1 on Nvidia represents $24.4 billion. Shares outstanding, 24 point, whatever it is. Market cap, yeah, shares outstanding right there. $24.4 billion right there. For every dollar it moves. So $41 is $1 billion. I mean, $1 trillion. It's kind of crazy, right? Like, what? 40 buck move is $1 trillion? It's because of how many shares are outstanding. Now, take for instance Meta. Like, how can it double and it only be $1 trillion? Because there's only 2.9 or 2.2 billion shares outstanding. So that one right there to add $1 trillion takes a $400 move and change. It bends a lot of people's minds. Like, wait, I thought $1 on one thing is $1 on another. That's not. It really depends on the number of shares. You go look at something like PLTR. You look at how many shares are outstanding. 2.25 billion. Like, there's more shares on PLTR than there are on Meta. That's crazy, right? Yeah. It's just one of those weird market anomaly weird quirks of the market. So 1.2 billion on Shopify. And you look at Reddit, relatively newcomer. That's interesting. Doesn't have any of the financial. There it goes. I was like, that's weird. Only 125 million shares. So $1 here is 125 million in market cap. It's worth $20 billion right now. Seems a little excessive. Look at that there. Making some money. Could it go higher? Sure. Price to sales, 14. It's getting near the danger zone. All right. Moving on. XLK. Looks like that might. I'll be very careful here. It could turn, but it also could go lower. Got support down here. These other lows. MDB. I'm hunting for opportunities. That looks like it's going lower. Coin. Oh man, it stepped across the line and it tilted the odds that we're gonna do this, but maybe it's just faking out. There's always the possibility that it was just I dare you to sell your stuff, and then we could go ripping. Stocks have a habit of pushing the extremes before they reverse. Really depends on Bitcoin. All of crypto really hinges on Bitcoin right now. TSM probably going down. Like we stepped across the line here, and we've been down here for almost a week. Kind of tips the odds that we might see that bigger correction right there. PANW. That one might need to come on down here. DoorDash. Now that might be done. Like it might have not. Sorry if you can hear my stomach growling. Might be done on this correction, and we go ripping right up here, 220. Applied materials. Oh. Sometimes I get it right there. Look at this to hold support right here and turn back higher. The initial buy might be a break back above that 155, 160 level right there. Let's put a 157. Might find some sparkiness if it gets back above that 157. Then the roadmap line, then the 618. Then we could actually go ripping on up, fill the gap, and then break out. Lots of stuff to do. ARM, another IPO. It did make a lower low right after IPO. So technically satisfied the bearishness, but this doesn't look like the peak of bullish patterns, and this may come back down to 37. It's kind of my working theory. How long? It could take a couple years, you know, like we looked at some of these, it took a long time, like Beyond Meat still grinding lowers. So some of these can take a long time. Snow took like a number of years. Oracle, I want to see it hold above this line right here at 125. If we hold above it, we can go higher, possibly in the 200s. But if we broke below that 125 area, we're probably going to experience something bigger and deeper and more sinister down possibly to the 40 area. QLD, that's just leverage. QQQ, C limited, still grinding this resistance. It's a big, like when we look at the big correction from October of 21 down to the lows in August of 23, we're at the 618 zone. It's going to take a lot of effort to get through this zone that we've got between 130 and 170 up here. And we made some highs back here on the way down in that vicinity. If we can get through that, it sets up the potential to go up to 525. But right now, we're just going to grind it, I think. Unless we just gap above it, I think we're going to grind it. Looks like having a little bit of trouble with the earnings wise. I don't know. UPROS, Ultra S&P, UDOW, Ultra Dow. Dow is just a crazy index. TQQQ. Potentially working on a reversal. UAL. Potentially working on a reversal here. If, you know, I would like to see this dip right down to this 618 at 57. That sets up a measured bounce. While this technically meets the minimum for measured bounce, this is the better level for that measured bounce and sets up the bigger potential to reach higher levels. Right now, we could be looking at a 202 if it breaks back above the roadmap line and back above the prior high at 114, 115. But I'd like to see it dip a little lower and set up the potential to go to 400. HIMS, the FDA saying they cannot sell Sagumlatide, whatever, GLP-1 drugs. Sets up the bigger, deeper retrace back down to the 17 to 20 area. Be careful. Loading up on that one. I think that was played out. ANET, watch out for the rip on further down to the next box around 65. CORT, well, that's a biotech pharma. Big pop. Big pops usually precede a big drop. And that's the last one on the list. No real banging bonus opportunities that I saw today. Now, this could turn green today. It doesn't have to stay red with the SPX. So caution is advised. Looks like we mostly did the retrace. So watch these lower time frames here. We break back above the 30 pretty definitively. Probably going up to test the 1 hour. We topped out there yesterday. Touched it twice and rejected. If we bust through that today, so that you can set an alarm or set an alert right there. Right at, say, 56.85 on ES. We break through that. We're probably going to come back up, maybe test the daily roadmap line again. It's hanging out right. It has come down just a shade, but it's hanging out right up there at 57.85. Yeah, I don't see any big reason for the market to move much for the end of the day. Since Trump's speaking after the market closes, I don't see any big catalysts coming the rest of the day. Doesn't mean that something doesn't leak or something doesn't happen or he doesn't decide to do something early, but probably not going to be much movement for the rest of the day. Then we just grind in here until we find out what happens after the market closes. That's what we got. That's what I'm expecting today. I'll be back again tomorrow. Same bat time, same bat channel. Make sure you subscribe. Make sure you hit the button for notifications. Make sure you put it in your phone. That, just a reminder. Hey, JT's going live at 9:15 every day. Come back, see me. I'll be back again tomorrow. 9:15. We'll look for what's moving, what's shaking, we'll talk about the tariffs and what the reaction is. And hopefully we'll be done with this correction and moving on higher. Have a great day, everybody.